Hey there, and welcome to our section on the S Corporation Accountable Plan. What the Accountable Plan allows us to do is reimburse employees for their expenses related to the business. Now, this is really important with the S Corporation where the employer is also the employee, or if you're a majority shareholder of the S Corporation, usually 100% or 99%, and then as well as the employee. Now, why is this important? Well, this is important because the IRS has specifically said that they want this accountable plan in place and documented so that you can write off your personal expenses. Now, we'll talk a little bit more about these personal expenses a little bit later, but think of it as anything that you've owned personally or that you currently own personally that the business is going to get a benefit for. For example, your cell phone. You're not going to change the billing or the title or the ownership of your cell phones over to your S Corporation, or your vehicle, or your home for your office and home. You're not going to retitle these or change the ownership to the S Corporation. Now, I do get asked quite often, if I purchase a new vehicle, should I purchase it in a S Corporation or an LLC for that matter, or should I leave it in my personal name? And the best thing to do is check your auto insurance with your auto insurance carrier and find out how much it's going to cost for a business insurance for the automobile. And usually it's about 4 to 10 times more expensive for a commercial or a business policy compared to a personal policy. So just remember that next time you think about, I'm buying a new car, should I put it in the business or an LLC? Just check your auto insurance rates first, and that'll usually give you the answer that you're looking for. So let's go through this sample accountable plan. This is something that you're going to have to draft. I'm showing you here the template that I'm going to go ahead and give you. Of course, you're going to take the template and caress it and make sure that it fits what you're looking for and what you want to do, taking out the highlighted stuff and things like that. So let's talk about the accountable plan as we go through it a little bit. So first of all, it's talking about your company. With this document states the terms of the accountable plan. It's adopting the requirements of the Treasury Reg Section 1.62, other laws, blah, 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 blah. The chief executive officer or other officer of this company is retaining the discretion to refuse reimbursement for any expense incurred by the employees, regardless of whether the expense meets the requirements of this Treasury section. Basically, it says if you're not doing the accountable plan, then you're not going to get reimbursed. Part of that is the employees must document and substantiate all the business expenses to the full extent of the law in a timely fashion as required by the Treasury Reg sections. So what does that mean? Well, that means that just put yourself if you were an employee of a large company, let's say Microsoft, right? So if you had an accountable plan at Microsoft and you showed up to your boss with receipts that were 6 months old, right? Is the boss going to look at you and laugh and say, no, you should have got these to me like 30 days after you had them, right? That's usually what happens. So put yourself in the shoes of, how would an employer treat an employee? And don't bend the rules for yourself, because the IRS is going to be looking for any little thing. Of course, if you get audited, knock on wood you don't, but if you do get audited, that's the thing they're going to look at. They're going to look for the documentation and were you doing everything correctly, right? So this template here is going to help you make sure that all your I's are dotted, all your T's are crossed, and make sure that you are handling everything properly. This is regarding the timelines. So this document, of course, you can change this document, but we don't recommend a lot of changes. But this document basically says that we have 30 days when an expense is paid or incurred, and the substantiation of an expense made within 60 days after the expense is paid or incurred. Returns of amounts in excess of substantiated expenses made within 120 days, and the substantiation of expenses or returns in excess amounts made within 120 days after the receipt of a periodic statement. Right? So what does that mean? So that means if you pay something quarterly and you're only in a quarterly statement, this gives you some wiggle room for having a little bit longer to substantiate those expenses. Now let's talk about these expenses. We have all expenses, right? The business purpose and the amount of the expense. Out of town travel, entertainment. With 2018 Tax Cuts and Jobs Act, we lost our entertainment deduction. So this is actually no longer in force. You're going to want to take out this section here for entertainment. You want to just take that out, delete that, boom, gone. Gifts, right? Gifts are limited to $25. Make sure you update your sheet limited to $25 because that's what the IRS has said is the gift limit is $25. So what is the cost of gift to you? What is the date of the gift? What is the description of the gift? What's the business purpose? Last but not least is listed property. So listed property is basically anything that you would purchase for personal use, but it can also be used for business. So great examples of this is a passenger vehicle or entertainment, recreation, or amusement. Computers and peripheral computer equipment. So let's say you need a scanner or a laptop or an iPad. This is all considered listed property, something you would probably purchase at a Best Buy that you could use for personal use as well as business. So whenever you're purchasing listed property, again, this is reimbursement. So if you just put it on your company credit card and let the company deduct it, that's fine. But this is if you're using a personal credit card and you want to get a reimbursement for it. That's when you're going to use the listed property here. All right, the next thing we want to talk about with listed property is vehicles, right? So the next thing with vehicles is you can actually use the 179 business expense for the vehicle. Now, if you're not familiar with the 179, basically it's for heavy trucks and SUVs. I have another section on section 179, so make sure you take a look at that. That'll go into more depth and detail. But if you've gone through the section 179, you've purchased a vehicle that you want a 179, this form will allow you to use the accountable plan with the section 179. This is really important when you're purchasing a vehicle titled to you personally, but you're going to be using it for the business because you want to make sure that you're running the accountable plan for the section 179 vehicle so that you have all your I's dotted and your T's crossed and all the paperwork is done according to the IRS, because technically the business didn't purchase the vehicle, then the business can't write off the vehicle. So if you do get audited, of course, knock on wood you don't, but if you do get audited, you purchased a vehicle, section 179, and you took the 179 in the business without doing the accountable plan, it could be thrown out or it could be challenged by the auditor. So I'm not going to go through the whole form like I did with the other one. You can read through it. If you have any questions, feel free to let us know. But as with the same, it's just a reimbursement saying I'm going to be using this vehicle for business purposes. It's section 179 expensing. Okay. This is basically an expense report. This is a more detailed expense report. And this is really good if you have a personal credit card that gives you really good miles or cash back or travel rewards or something like that. And you want to continue to use your personal credit card for business. Now, if you're going to do this, I highly recommend that you get a separate card or have some sort of break in the statement or a separate statement showing your business purchases separated or separate in some way from your personal credit card statement. Whether that's a spousal card for your spouse or card for your kids or a separate card, with a different name on it, however way you want to do it. Try to keep those separate because the IRS isn't going to want to see a lot of commingling there. But this is basically if you have a personal credit card that you get really good miles or really good travel rewards or points or anything like that, this expense report will allow you to easily categorize your expenses and then put them on the accountable report. All right, so let's talk about this accountable report. Here it is right here. This is the worksheet and reimbursement form. You can see there's the name and the period. This is already filled out for you as kind of a template, but if you go down here on the bottom, there's a blank worksheet for you to use. And you can see all this is 0. Now the yellow boxes here, these are going to automatically calculate. If you look up top, there's a formula. And then also the red boxes will automatically calculate to a formula as well. So the only ones that you have to fill in are these green boxes. So let's go through these individually and we'll talk about these in more detail. So the first thing is your office, your office and home. This is really important for the S corporation because remember, it's owned by you personally. It's your house, but the S corporation is getting a benefit for it. So what is your office square footage, right? If you measured it out, is it 100 square feet? Is it 200 square feet? 300 square feet? Go ahead and enter that in as the office square footage. Your total home square footage is, of course, your total home. There's a couple different ways of looking at this as far as maximizing this business use percentage of it. One of the ways you can do it is you can actually take out what's referred to as utility or plant and utility spaces, which is things like hallways, HVAC systems, and a couple other things. But for the most part, just go ahead and use your square footage, your commonly used square footage of a house, whatever is reported, on your property taxes. It's not going to change the business use that much. Now, the next thing you're wanting to do is plug in these numbers. So let's say you're spending $5,000 a year on mortgage interest. Here's your property taxes. Here's your private mortgage insurance, your PMI, your hazard insurance, utilities, HOA, da-da-da-da-da-da. This is all going to calculate based on this 6%, and it's going to give you your total home office and then how much you can allocate or how much you can actually take. The red box is really interesting here because this shows you what is left over to take on the Schedule A. The Schedule A is your itemized deductions. So this blue box here is the amount that's allocated to your home office. This is how much you can actually take as a reimbursement using this worksheet. Cell phone and internet, same thing. How much did you pay in your cell phone? How much did you pay in your internet? What's the business use? The IRS has a maximum business use on cell phones that are used for personal and for business for 80%. So just stick with 80%. It's a good kind of rule of thumb. The IRS is comfortable with 80%. What's the next one? Miles, right? So again, the vehicle is owned personally, is used personally, but it's also used by the business. This is going to give you your mileage rate. You can see this is actually from 2016. Make sure that you use the current year and update the mileage rate for every year that you're going to be doing this. Go ahead and plug in the number of miles that you're going to drive, and then that's going to be the business reimbursing you for the mileage of your vehicle, and that's totally okay. The next one is the out-of-pockets. This is like travel, airfare, parking tolls, non-commuting, meals, and entertainment. This again kind of plays into if you have that credit card that gives you really good travel rewards or airline miles or something like that. That's when you're going to want to use these reimbursement sheets for those expenses. Typically, you're probably going to want to try to get a separate credit card for the business or debit card for the business and run all of your expenses through the business so you don't have to worry about this out of pocket. The more commingling that's happening here, where the employee is paying for it and the employer is reimbursing for it, the more commingling like that, the IRS starts to ask more questions. So the least amount of items and amounts that you can put on here, the better. Right? You usually don't want to have a personal credit card that you're charging all your business expenses to. All right, so what this formula does is it's going to add up all the blue cells. It tells you right there, total of all the blue cells. And this is how much you're going to write your check for the reimbursement from the accountable plan. Now go back and make sure that you're looking at the cash flow diagram and the cash flow video that I did and making sure that the accountable plan is only one of the checks that you're writing to yourself throughout the month. You still need to be paying yourself with the payroll, the reasonable compensation, reasonable salary. You're definitely going to want to take advantage of the rent the home strategy. Check that out if you haven't looked at that yet. The reimbursement, and then also whatever's left over is going to be dividends to you. Dividends are the easiest thing to do. Just write yourself a check, and that's your money. Why do you want to maximize dividends? No Social Security and Medicare. So you're going to save a lot of money here with the S corporation because you're not paying the Social Security taxes and Medicare taxes on your dividends like you would on the reasonable compensation or the salary. All right, so that's it for the reimbursement plan. Feel free to email me, contact me if you have any questions. More than happy to help you out with this. Thanks. Bye.